In the first 100 days of this year, I have made about $250,000, and I'm going to show you the strategies that I use to make those profits. So if you come over to my screen, there are two very, very big things that I pay attention to no matter what kind of trade that I'm making, and it's volume and trend. Volume and trend determine everything. So let me talk about what volume is, for example. Volume is the gasoline that goes in your car, and you may be asking, well, what exactly does that mean? I'm going to tell you right now. So if you're trying to go up a hill, let's say you're in San Francisco and you're trying to drive up a hill, do you want to have more or less gasoline in your car? Well, of course you want to have more. It's the same thing when you're trading stocks. If you're going long on a stock or you're going short on a stock, you want to have more gasoline in that stock going in the direction that you're trying to go. So if you're going short on a stock, you're trying to make money on the way down, you want to have a lot of sellers in the stock pushing in the same direction. Let me give you another analogy. You're pushing a giant boulder up a hill. If you try to do that by yourself, is it going to work? Probably not. But if you have 100 people pushing that boulder up the hill, you're probably going to start to get some momentum and rolling it up that hill. It's the same thing on the way down. Now, when it comes to trend, what does that tell you? Well, it tells you the direction that everybody is pushing. And that's the beauty of the long-term trend, the long-term stochastic over here. We can see here, and I'm just showing you SkyWest, and I'll get into more detail in a second, but you can see right back here, we were moving. This is a weekly trend. You can see how everybody was marching in the same direction, pushing this thing forward. And what happens when the trend is pushing forward like this? Well, the stock price is going up at the same time, right? You can see there's very consistent volume in here. This yellow horizontal line, that's your average volume line, the average amount of volume that you get per day traded in a stock. Conversely, when you're coming down, what do you want? You want everybody pushing in the same direction. Why? Because it pushes the stock down. You can see we had a lot of selling volume in here. We had a lot of participation. Everybody was pushing in the same direction. So those are the two main things that I look for when I open up any chart. I look at the volume and I look at the trend. I've kept those consistent throughout my 21 plus years of trading, and I kept that consistent in this 2025 trading year. Now, this has been an interesting year. I was just going back and looking at a lot of my trades. Where did I make money? I made money shorting stocks. And you may be saying, well, I heard shorting is dangerous. I heard shorting is something that it's a game you don't want to get into. Well, generally, yeah, that's probably true. But if you use a process like I use and you have stops in place and there is a set number or percentage that you're going to lose, and it's going to stop the trade and you're going to get out of it and your losses are going to be minimal, you are going to do very, very well, just like I have. You need to be able to trade in both types of markets. You need to be able to go long in a good market, and you need to be able to go short in a bad market. I'm often asked the question, well, how many stocks do you trade? Well, I trade 5 typically, and you can see them here on the right side of my screen. Right now I have 6 up here. I have not made a trade. This is Abercrombie and Fitch. I have not made a trade there, but typically, most of the time I'll sneak one more in there. But really, let's say you're seeing 6 stocks here. I see 12 stocks here. Why? Because I can go long and short on SkyWest. I can capture this and I can capture this. On CCL, I can capture a long position going up and I can capture a short position going down. You need to be dynamic. You need to be able to go both ways. You need to be like an athlete. Think of a hockey player. Think of a basketball player. They need to be able to play both ends of the floor, the ice, the court, whatever. They need to be able to play offense and play defense. And that's kind of where you're going when you are trading. You have to be able to go long and short. Now, if we pull up, let me pull up the S&P 500. This is the market index. And we just look at this year. So this is the beginning of the year here. This is January 2nd. Okay. Well, we had a little bit of a downspout. And then we had this big 5, 6, 7 day run. Then we went sideways and then we went down. I have not made any money going long in this market this year. I made $250,000 going short, betting against companies. Why? Because to me, I look at the chart and I say it's the exact same thing. If I take this chart, let's go back to CCL, for example. If I take CCL, and I'm going back to last year, but that's the point is I want to show you. Look at this. Coming through the sweet spot. The sweet spot is the area where you have the highest probability to make money. That's between this red horizontal line here on the bottom and the top. This is where you make the most money. You're coming through the sweet spot, stock price is going up. Conversely, coming through the sweet spot, coming down, stock price is going down. The only difference here, these are exactly the same things in my mind. This is when you have buyers. This is when you have sellers. All you're doing is tipping this over. You're taking this chart and you're just flipping it over. That is the only difference between buying long and selling short if you use the process that I'm teaching you. If you're just going out there and shorting stocks, that's not going to work. Of course, it's not going to work. There's infinite losses there. It's not a good place to go. That's why shorting gets such a bad rap. I was listening to a podcast the other day with Bill Ackman, and he was talking about shorting and his massive multi-billion-dollar losses that he's taken in short. He's only shorted 2 companies. Of course, he's notorious for Herbalife, but that is a very, very dangerous game. He doesn't do it anymore. There's not a lot of major hedge funds out there that short anymore because it's such a dangerous game, because it has such a bad reputation, because the losses are infinite. If you do it the way that I'm telling you, the losses are not infinite. You have stops in place. When the trend switches on you, you exit the trade, you move on. Are you going to lose sometimes? Yes, but you're not going to wipe away your entire portfolio. So my point in telling you all this is I haven't been able to go long this year. Maybe at the end of this year, things are getting a little bit better in the market, a little bit more predictable. Maybe I'll be able to go long. But for now, I'm going to just keep going short on stocks. And I encourage you to do the same thing. You have to be a dynamic trader. And that's the benefit of learning from me. If you learn from me, you're going to be able to be a two-way player. That's the biggest thing for making money in this market. So let's pull up SkyWest, for example. This was a great trade that I made. This one was actually brought to me, and it's turned into one of my 5 stocks by somebody in the community. I love this stock. I absolutely love it. So I think it's a small regional airline. I don't really care. It doesn't matter to me. It's all about the pattern. But he saw this thing running up and he said, "Hey, Mo, look at this long wick on here. There's something going on here. What is going on here? It's more likely than not going to pull back because you started to see this kind of wishy-washy trend that was going on. Not everybody was rowing in the same direction. When you get people going in opposite directions, the boat is spinning in a circle. You don't know which way things are going. They're going to have to choose a direction. They're either going to go this way or they're going to go this way. And odds are they're going to start going down when you start spinning, because usually if you start spinning, things are not good, right? So I said, all right, well, I'm going to put a tracker share on here. I'm going to buy one single share of the stock. And once it breaks into the sweet spot, once it gives me the highest probability to make money, I'm going to get into it. I entered it somewhere in here, and boom, this thing was absolutely off to the races. This was an incredibly profitable trade. I'm looking at it right now. This one made me $21,900 just on one single trade. One single trade going short. And to me, it was so obvious. It's not obvious. It might not be obvious to you as a new viewer, but don't worry about that. I've been doing this for 21 years. At some point in your career, let's say you stick to this for a year or 2 years, this is going to become second nature to you. You're going to be able to pull up any chart and explain it to anybody. Trust me on that one. If you are diligent, you will do very well with this. But I saw this and said, all right, this is perfect. Every indication is telling me, go short on this thing. Everybody's rowing in the same direction. All the volume is pushing in the same direction. If you look in this little area right here, you see a lot of red. You don't see a lot of green, right? The green is people taking profits, getting out of the stock because they didn't want to be on the short anymore because they didn't think it could go any lower. I knew it could go a lot lower. And that's when I was able to make this massive gain on 21.9%. I trade in $100,000 increments. That was a great trade. I come over here, CCL. This was another one that was brought by the community. I have had a long history with CCL, but it was the same thing. I was waiting for this to, if we just zoom this out, you had what's called a 50% rule. Here was your high, here was your low. This is 50%. This is an area in the middle that you're not going to break above. You can watch another video on 50%, and I explain it in great detail. But just know, for the purpose of this video, you're never going to break above a 50% rule unless you have an insane amount of volume. It has to be a really good market. That's just not what we have. So as soon as we got to here, I said, well, this is going straight down. And it did. It absolutely did. So you can make money going short in this market, in any market. You have to be able to do it. And it's really not that hard when you really simplify it and you say, what is a short? Well, it's a long flipped upside down, and you're just looking for selling volume instead of buying volume. It's as simple as that. So I want you to do something. I want you to try this for 90 days. Subscribe to the Patreon, join it. If you don't make your money back in those 90 days, once you start trading with real money, cancel it and move on. But give me 90 days. I think that people are leaving a lot of money on the table by not knowing how to trade with a process that they can use for their entire life. It's going to take 90 days to get you rolling. Try it out. If you don't like it after then, you can tell me that I suck, cancel it, and move on. Now, I want you to go watch this next video. It's a comprehensive video that covers everything that you need to know about trading. You need to watch it next, but I've also made it very easy for you. There's a guide, there's a PDF in the description below. It covers all the basics, trend, volume, etc. Go check it out.